Right, now let's look at these current tax. Right, so what we understand by the term current tax. We know, as I pointed out before, tax, right, the current tax. Who would calculate the tax? It is the tax authority. So the tax would be computed, on the taxable profit, right? Tax adjusted or taxable profit. On the taxable profit, we would do the tax rate, income tax rate, right? So that is the current tax. So this is what I mean by current tax. It's not on the accounting profit the tax will be computed. Tax will be computed on the taxable profit, which is not the same as the accounting profit. So what they're trying to tell us is this. Say, for example, for the current year, and say this was 2019, I computed my tax based on the taxable profit, and it came up to, say it came up to 90,000. It came up to 90,000. So the double entry for this 90,000, I'm going to debit my profit and loss account, credit the tax authorities, tax liability, right? That's the double entry. And for example, say now I moved on to 2020, right? And in 2020, what has happened? And this was my tax liability of 90,000, which I did not pay. And then the tax authorities now rework the figure. And because these were estimation for me earlier, now I was told the tax for the last year was not actually 90,000. There was a mistake. So now I've been asked to pay 110,000 for the last. So that means 20,000 was short. The money that I paid, 20,000 short, right? So that 20,000 for the which is related to the previous period would be added to my current tax liability, right? And also my 2020 liability, which is again would be calculated on the taxable profit, plus whatever the liability I have from the previous period, everything would be added and shown as my current tax liability, right? So here, the amount of income tax payable in respect of taxable profit. Income tax will be computed on the taxable profit for the period is known as the current tax. So current tax unpaid for the current and in the previous year is recognized as a liability. If you have any unpaid current tax, that need to be shown as a liability. On the other hand, if you have a tax benefit that I suffered a tax loss and I suffered a I've suffered a loss as a result of this if I'm having any tax reliefs, and then that can be carried back to recover current tax of the previous period. I mean, we have done this in when you did in the taxations, and if we have any tax losses, those tax losses can be carried back to claim reliefs. Carry back for 1 year can be claimed, right? And then anything unrelieved can be carried forward until it gets fully claimed. So this paragraph from stakeholders' perspective would explain clearly, as I pointed out, tax charge, current tax would not be based on the accounting profit. So someone who's trying to look at the company's annual statement, they would not understand why the company's tax charge is not the same. So for example, if they try to work out the tax rate was 19%, if they try to work out 19% of this accounting profit, you would not get the figure. The reason why, there are certain adjustments we would make because we would try to convert this accounting profit into taxable profit, and that conversions include non-deductible expenses. Some expenses are not disallowed. Example would be depreciation. So we would make all those changes, and then on that profit would be what the tax would be computed, right? So that reconciliation is what it is shown here. That means the basic one-line explanation is that tax liability is not calculated on the accounting profit, but it is computed on the taxable profit, right? So that's the difference between a current tax and which is worked based on the taxable profit. And so we have an example. I'll do the examples first, and then once the example is done, we will come back to this particular slide for you to explain, right? It is basically recognition of current tax liability and then the current taxes. So with respect to current period, we can have a current tax liability. That means when we have to pay to the tax authorities, it will be a current tax liability. At the same time, if you're supposed to recover tax from the HMRC, it will be a current tax asset, right? So generally, a current tax is charged to the profit and loss account as an expense debit, and then the credit would be to the current tax liability. But there are exception cases where, right? One exception is where we are currently on a business combination. We have bought a subsidiary, and that tax was related to that business combination. In that case, that tax need to be taken as a part of the goodwill, right? And the next one is the tax arising from transaction which affects the equity only. That means prior period adjustments, right? In that case, we would have to only include within the equity. Now let's look at these examples that we have here, right? I'll explain this example, right? So let's look at this example, right? Let's look at this example. And as I pointed out to you first, remember the current tax is charged on what? Not on the accounting profit, but taxable profit, right? On the taxable profit, the income tax charged rate would be charged. That's the taxable profit that we would, if the self-employed person, right? That's we will be charged, right? And so in this case, we have a Darton company, and so the key important term here is taxable profit, 120,000. So if you take in 2018, right? 2018, the first thing we just need to calculate the current tax, right? How I calculate the current tax? I need to know my current tax for 2018. I need to know the taxable profit, right? So I need to find out the taxable profit for 2018, and that times the tax rate, right? The income tax rate. So the taxable profit here, right? So the taxable profit here, I was told $120,000. That's times rate has been 30%, right? So if I just work this out, I get 36,000 as my current tax. This is my current tax, right? I would debit the profit and loss account 36 and credit the tax liability. This is my current tax, right? So now I come back to my 2018 figures, right? 2018, I have in 2018, if I just write it here, let me consider them as working. So for 2018 workings, right? My current tax, which I've just worked out, my current tax according to the taxable profit is 36,000. Not only now, it says, it also talks about last year's. Remember when I first started this video, I said to you, the tax liabilities, right, would consider any unpaid tax for the current period and also any unpaid for the previous period, right? That would aggregate together as the current tax liability. So they have spoken about the last year. Last year, I have charged a tax of 30,000 on my books, right? On my books, debited profit and loss account, credit tax liability 30,000. I haven't paid it, right? As 30,000. But then now I was told last year's actually, HMRC done the work. Now we have agreed last year's profit was last year's tax was actually 35. Right? I have set aside and made payment only for 30. Now I've been told it is not 30, it is 35. So I underpaid tax. Of how much? I underpaid. I meant to pay 35, I paid only 30. So with respect to last year, I have an underpaid tax, right? Unpaid tax. Underpaid, right? Tax underpayment of, with respect to 2017. How much was the underpayment of tax? I have £5,000. So that 5,000 need to be paid now. So my current tax liability now is not 36,000. altogether, current tax liability, this is current tax charge. My current tax liability now gonna be 41,000 now. So this is what I have, tax charge and then the tax liability. This is the figure that will be charged to profit and loss account and taken debit profit and loss account, tax charge, credit tax liability. So this current tax, this is based on the current taxable profit related to this period, but this was the underpayment in respect of the last year. Likewise, if I just move on to the next example, now instead of 25, what if it is 35, instead of 30, what if it was 25? That means the current tax that I need to be paying, because based on my current taxable profit, 120,000 times 30, it was 36,000, same as before. Only figure that's going to change is 25. That means last year, I already charged 30,000. Now I was told by HMRC with respect to last year, the figure is only 25,000. So what has happened? I charged more in the last year. I made an overpayment with respect to last year's tax, right? So if I redo this now for part B, if I redo this for the part B, I have the first figure is the same as the earlier one, but here now it is not underpayment. I have overpaid to the HMRC, overpayment for 2001. How much the overpayment was? 5,000, right? So the overpayment would reduce my liability, right? So my tax charge for the current period, tax charge and tax liability with respect to 2018, now it's going to be 31. It's going to be 31. I hope that's clear, right? I hope that's clear. So I would cover the deferred tax in the next video in more detail, right? And also I would aim to do the past papers as well, right? That's video 2 done.